All right, good afternoon. It's Wednesday. I know no video yesterday. I'm thinking about doing Monday, Wednesday, Friday because every day is a bit much for me. So yeah, let's just get right into it. This could be our most important daily or midweek. We're gonna start doing it beginning of the week, midweek, end of week, and then weekly. So do yeah. So this midweek recap, first ever midweek recap, and this could be the most important recap yet. And this right now we are at the turning point or a potential turning point in the market. So everything has started to align. The S&P, the Dow. Get rid of this. It's not there. The Nasdaq. Some little macro that I'm filling. We're not even going to recap any stocks today. I know I sometimes do that. Only S&P, Dow, Nasdaq. Let's get right fucking into this shit. This today we have hit the most key levels. I drew this trend line today. I know I have not brought this trend line up before, but we have hit an absolute. We didn't talk. I don't really talk about Nasdaq, but this trend line and the supply zone coincides here, which we have talked about. We have now hit boom, boom, boom. We broke above it here, came down for the nice retest, and then we also had action over here. This is the one-day candles. And look at that. We just barely touched it right here. We'll go drop it down to the hour candle. Crazy. Crazy stuff happening right here. This was an interesting day to say the least. And I said in the Discord too, we are currently pretty heavy on the short side. I know a lot of people have said have told me, and a lot of people are saying right now in general, it's very risky to be playing the short side right now with this much momentum in the market. Let's talk about the bear case. We have had a tremendous upside these last couple days, these last couple weeks. Look, like we've had one, like two, since we broke below this bottom half, like down here, we've had like pretty much 2 red days. This red day last on Monday, like this was hardly a red day. It was a red day, but we really only, and in the last week and a half, we've only had 1 red day. And in the last 2 weeks, 3 weeks, we've only had like 2.5 red days, three red days. Let's say that. Crazy. So the Nasdaq found resistance today at this trend line. The Dow found resistance today at the 200-day moving average. There's also some local resistance coming across here. The Nasdaq found resistance at a supply zone double top. The frickin' Northman Trader pointed. This is Northman Trader's words. The mother of all double tops on the Nasdaq. And now I've been doing some research into Dow theory because someone brought it up to me like, "Oh, look into Dow theory." I was like, "Okay, I'll look into Dow theory." Like, you might find something interesting. So what I found, basically, there's 2 parts of Dow theory that you have to realize. The first part we'll talk about, which is a bit of an easier part to just explain right off the bat, that as markets rally or whatever, volume has to match the price. That's volume price analysis, which is what a lot of my philosophy is based on. Does volume match the? I know volume is kind of low. We've been tapering off volume and price has been increasing. Maybe not over here, but definitely on the Nasdaq, definitely on the S&P. Volume has been weak. Volume today on this nice big green candle, weak. Weak. Weak volume. That's not. And as we know, hedge funds have been staying on the side. This is the retail investors or the retail trap, the great retail trap. Maybe gets to be called. There's still a lot of momentum to the upside. Let's talk about the bear case now. This is where shit gets real. Dow theory. When markets hit new all-time highs, there's 3 major indexes, obviously. Back in the day, Dow theory had to do with like the different indexes, like with the railroads and the Dow Jones Index, and like stuff that had to do with like the early 1900s. When each index hit a new high, all the indexes had to be at new highs or very close to new highs. They had to move together. They didn't always have to be at similar price levels, obviously when adjusted, because obviously these are all different prices, 3,000, 20,000, almost 10,000, high 9,000s. They don't have to be the same price. They don't have to be moving together necessarily. But when a new high forms, all the indexes have to align and confirm each other that high is legit. Please tell me where there's confirmation that we have a new high here. Pretty much, we had a new high here today. I think for like a half a second on triple Q. Crazy, but there's no confirmation. This is breaking the laws of the stock market. Like, this is breaking Dow theory. If we continue to go up, Dow theory is broken. Like, that's pretty much what it gets to. Like, this is serious. This is a lot of serious downside potential from here. Just want to alert you. There is a negative % chance I take any place to the upside right now. Like, negative. I do have one upside hedge that was up a lot today because my downsides were my puts were down. So my calls did what they did and they hedged against it. And they were perfect. I have a lot more money to the downside, but the way I positioned myself, the call I had, or calls, outweighed the negative. So not outweighed, but they covered it. So that's what we were looking for. That's good. I bought more shorts today because we are entering an area of key resistance. I bought right into it. The play was I bought right as with that line pretty much. I bought some before it. I bought right when I thought right when it looked like we might turn around, but then we didn't. Then I bought more. So that was that. That's your lesson on Dow theory, and my lesson was an hour ago. I've heard about it, but my actual really getting to know what it meant. That's pretty crazy. So let's go right into just sector performance today. Wednesday. Yesterday, I'm pretty sure it was also a green day. Not too crazy, but today we obviously had an incredible, an insane day. Stocks across the board were booming today. Obviously, these don't look like booming numbers, like 3%. For one day, this is crazy. Industrials, financials. Okay, let's see what Wells Fargo is doing. Probably nothing because Wells Fargo. Oh, 5%. Never mind. That's not nothing. Yeah, we are in a danger zone right now. This is crazy. And then these numbers came out recently, June 3rd. So pretend the red doesn't exist for a second. This was what April was saying, forecasting. Everyone thought we might get the 1 to 2 quarter recovery. May, people have come down from this 1 to 2 quarter recovery, and they have put their money into the 4, 5, 6, potentially over a year and a half in recovery. Now, there are other projections that put us at 10 years. But this is what a survey said, respondents. So, I don't know what ages they were, I don't know. But that was that. So, what am I looking for tomorrow? I am looking for either futures to fall off the face of the earth. Fall off the face of the earth. Sorry, little interruption. Fall off the face of the earth. Or we're going to have, that is unlikely. I don't think futures are going to fall off the face of the earth. Let's just clarify that. I really do see the potential for we make a new all-time high. And this will clear out so many people. This could fake so many people out and trap so many investors. That could be what the insiders want. I don't know what the insiders want. I'm not a freaking insider out here. But the look above and fail would be deadly to so many retail investors. New all-time highs. Oh my God, that could be deadly. Watch out for that. If that happens, you bet I'm loading up on shorts. I do have a hedge in place. I'm happy I kept it. I was debating just to sell it off, take profit on it. But I'm holding my hedge just in case we somehow run. Let's say we break out somehow. And we run. Which would somehow, I don't know how that would happen. But it could happen. We are at look at this range. We are at the high end. I think we're primed for a breakout. At least a correction down to these levels here. Right here. The 2900 level. Now, That's what I've seen some people projecting 2900. Personally, 2900. I think the downside potential is real. We have real downside potential. This could be just a bear market rally. Never know. Today was the lowest in bonds in quantitative easing. Yet we've seen quantitative easing today, federal bond buying lower than numbers previous before the drop. Numbers in like December, the quantitative easing today was lower than that potentially. We could throw a market might build fit. Hope you liked the video and trade safely.